Good afternoon. I welcome you to today's Trading Spotlight webinar here on Friday, the 22nd of May, 2020. Yeah, please excuse that we have now a little delay here with the start. That has something to do with a new layout here in the back end, which is kind of weird. Not such a big issue. Everything should be fine. You should hear me well. If there's changes, please let me know in the chat box so that I can address this as soon as possible. And now let's switch directly to the action and what we want to look at. Today, we want to look at something you can call Gann Hi Lo System. In fact, it's a trading system, an idea for a setup. And probably, especially for me, someone like Gann is a fascinating character, in fact, because Gann has a very, very mathematical approach to trading, in fact. Especially when it comes to using geometry in spotting trading opportunities. And we'll give a quick introduction to this, by the way, in a few seconds, just to let you know where this Gann comes from here. It's around for quite a while, and also you can find possibilities to use Gann fans, in fact, similar to Fibonacci's in your trading, in your MetaTrader, to play around. Yeah, and as I already said, I will give you a quick introduction to this. To Gann theory, what's behind this. We don't dig too deep into this matter because what the main focus today will be on is the so-called Gann Hi Lo activator, in fact, and how to use this to formulate a trading setup and then take it from there, in fact, and formulate a setup. And then show also real-world Gann HiLo trading examples. In fact, I prepared one for the long side. I've prepared also one for the short side. And yeah, let's just take it then from there. Before we start, probably a quick introduction to my person. I did an interview with Admiral Markets around 1 year ago now. I think it was probably not really a year. It's in July 2019, before we started this series here. And there you can, in fact, find many details around my person, how I got started into trading, what's my academic background, everything around this. What's probably the most interesting thing right here is now that I'm located in Berlin, in Germany. And why is this of importance? Well, because now here is Admiral Markets. This is the broker behind this trading webinar, trading spotlight webinar series. Admiral Markets is a financial service provider, especially with a focus on FX and CFDs, and has offices around the globe, in fact. And offices around the globe also includes an office here in Germany, in Berlin, in fact. And why is this noteworthy? I mean, beside the conditions you get when trading with Admiral, and you could have seen this in real time, in fact, now during this Corona lockdown and massive volatility hitting the market. The thing is, I mean, there might be plenty of brokers out there showing you, well, let's take the DAX in this example especially. Well, here, when it comes to the DAX, we still offer a spread of, let's say, 0.5 or something. This is the spread we offer, but then our execution comes into focus quite quickly, especially with such a volatile, thin market environment which we faced here over the month, especially of March. And now, the thing is that Admiral has not only a very attractive offering when it comes to DAX trading, but also when it comes to FX trading, when it comes to gold trading. So, in fact, a very competitive offering with very attractive spreads, deep liquidity, and in fact, slippage is not such a big issue. Sure, certainly, sometimes there is slippage, especially if market conditions are that volatile as they have been. But in case of Admiral, it was very low, in fact, or there was not much slippage involved when you had an order executed or trade executed, in fact. And I can say that because I run a project here in the German community, trading especially the DAX, main focus on the DAX here. And real market conditions were horrible when it came to moves on the up and downside, horrible for us traders in regards to volatility in a positive sense, certainly, but horrible when it came to order execution, especially when looking at the reference market like FDAX. And yeah, when it came to Admiral, you not only had a very tight spread, but in addition to that, a very great order execution, in fact. And that's why is it noteworthy? It's noteworthy because there's so much negative feedbacks going on around trading in general, and Admiral just did a great job here. And this is noteworthy in my opinion. And in addition to that, that's besides the trading conditions. Beside of that, having 20 offices around the globe, I think is great because you can be sure, especially when it comes to such a sensitive topic like financials, you can be sure that you find someone where there's a high likelihood, let's say, that you find someone in your respective language, in your native language. In fact, you can talk to them and ask your questions and get answers from. So that's it around Admiral Markets. So definitely worth a look, admiralmarkets.com. Check out the website for further details. Now we want to look here at, and I have already this graphic included here. Now we want to start with a quick introduction to Gann theory, in fact, and dig a little deeper into this quite fascinating topic, especially for traders who are more quantitative, even though probably have some let's say discretionary touch in their trading. I think that's a fair way to put it. So what does Gann, in fact? A Gann theory predicts market movements by using angles, and that's something you can already see here, in fact. So what Gann does is he says we stay in an uptrend as long as we are not breaking the ascending angle or the trend line, which is not such a big surprise. By the way, I just want to skip the part where I introduced William Gann to you. When was he born? When did he die? And all this. I think this is not of high interest. Let's directly dig deep into his theory. And so what he says is, in fact, he tries to predict based on such angles here. He tries to predict the market movements which are about to come. And he says, for example, something which is not such a big surprise, in fact, that we stay in an uptrend as long as we are not breaking the ascending angle or the trend line. Which means when looking at this, I have also a more or a better, let's say, a better example in the next slide. But just let's assume that you have the price here of whichever asset. Let's take gold right now. So you have the gold price here. And as long as the market trades here above this line, let's say it's 1, 2, in fact, we're also here, it's 45%. You can also say that 45 degree. As long as we trade above that, we have an uptrend, respectively. If we trade below, you can also use it in the opposite direction, but we're working with an uptrend here. You have a downtrend. That's not such a big surprise, in fact, because I mean, we are many of us probably when working with technical analysis, we're working with lines within our charts, with trend lines especially, and there we say, or channels also, and then we say, as long as we trade above that, well, this is then a clear sign that we stay in this case in an uptrend. So, and Gann-based predictions of price movements are working on 3 premises: price, time, and range, in fact. And what this means is something I prepared here. So this is a graphic I used from Investopedia. So for further details also on who was Gann and all this, I highly recommend just using Google. Google William Gann, in fact, Gann theory, and there you will find plenty of input, in fact. We want to just use this as a quick introduction to then use it within our high-low trading system, in fact. So so price, time, and pattern, respectively, price, time, and range, in fact. So price study includes here the usage of support and resistance lines, pivot points, and angles, in fact. So then we have the time study. This looks at historical recurring dates derived by natural and social means. So he's also taking into account the psychological aspect when it comes to trading. So using a chart as a picture of how the market feels right now, in fact. So since trading is mostly based on emotions, given by the fact that traders are human beings, at least have been, most of them have been, around the time when Gann formulated his theory, even though I think this is still a valid statement, given the fact that when we look at algorithms, especially, or automated trading, well, we need someone to program this, right? So the only thing which is then not given anymore to some extent, I mean, this also includes that the trader is not intervening. What it includes is that still the emotions or the patterns which were recognized by the trader are just formulated, automated, and then emotions are taken out when it comes to enter the market, respectively to exit the market. If you have preset rules you follow here, still it's a human construct. It's even though an algorithm is computerized, it's still a human concept, a human construct, and which means it still includes elements which are common for human beings, for us in this case. So but let's come back to time study. So it looks at historical recurring dates derived by natural and social means. And then we also have the pattern study, which looks at market swings using trend lines and reversal patterns. So yeah, what happens here is, in fact, it perfectly illustrates what it probably illustrates it a little better than what I already said at the first slide here with this cycle, and then these angles which were right into this. Even though this makes it more clear, we still have no chart here we look at, but again, it perfectly becomes clear what's talked about here. And in fact, so as long as we trade above this line here, in this case, which is the pattern, okay, we have a trend which is established over time, in fact, and the price which is rising. So you have these three components here in it. And then Gann just says, well, as long as we trade above here, this 45% line, for example, we are in uptrend, respectively a 30% line. Obviously, the bullish momentum is not as strong as it is in the case of 45%, because the angle here is obviously smaller. Still, there's still an uptrend and the pattern. So, which means it could be that we break below this 45% line here, but still stay in an uptrend, even though the overall dynamic of the bullish momentum then diminishes. But as long as we do not break below the 30 degree line here in this case, we stay positive, right? So, or probably let's probably do it that way. So probably that makes more sense. Let me just try this one. I copy this and now I go here to paint, just to give you a better idea of what I'm talking about. Okay, so we have here the 30% angle, and then we now do the following. Let's do it that way, and let's use a red line. And so now let's try this one. Okay, so now I'm not really sure whether this is a 45% line, but just let's assume it's 45. Okay, so this is 45. So we projected this here, this part, we projected it just into this chart. And now let's look at this here, and let's use probably a green line. So let's assume we have now an uptrend, which is here developing, and now the trend breaks at least this red pattern. But, and this is the interesting thing, the trend stays intact here above this line. So that it's not necessarily sad that the trend is broken once you break here below this red line, but you keep on trading at a lower angle, let's say, and with less than dynamic in this case. So just to make sure that you understand what I'm talking about here in this case, okay? So as long as we trade above this line, 45, we have an uptrend, but this is not sad that it's the overall trend is broken, but what you then have is here 30% angle, or 30 degree we are working with here, and then we have a as long as we trade above this angle, we still stay in an uptrend, even though with a less dynamic, or in a less dynamic environment, in fact. So yeah, that's it around the quick introduction, in fact, when it comes to Gann. And now we use Gann we use Gann here to introduce this Gann HiLo activator. That's a little unfortunate because I just wanted to play with animations here, but okay, fine. So what is this indicator about? It's an indicator, by the way, just before you ask now. It's not that easy, well, not that easy to find is probably the wrong way to put it, but you have to download it. Which means, let me just see, I haven't prepared this because I downloaded it within my MetaTrader, but this problem is now, this is German. Probably there's also an English version of that, but yeah, it's a fair way to put them. Why not? Let's use this. So 1 second, let's just open here. We just open MQL5 here. And there you can download it. Within your MT5, it's possible to go via the marketplace button and then just type in Gann HiLo or Gann HiLo, HILO, for example, HiLo activator. You will see this here occurring in the charts I prepared at the end in regards to the long and short setup. But just to let you know, it's not a standard indicator. So if you have an MT5 from Admiral Markets right now, you won't find it without going to the marketplace and then downloading it there. Even though here there is some free Gann HiLo activators or Gann HiLo strategy system indicators. They are for free. They are available, so you can just download it and it's directly imported into your MT5. So that's just to let you know where you get this from. For further infos, by the way, if you want to have the indicator, just send a quick email to Admiral Markets, to the support probably, and ask in regards to this webinar, Trading Spotlight, if they could send over the link where you can, where respectively the indicator, how it's called, and then how you can then get it from the marketplace in the MQL5 environment, in fact. So now let's have a look at what this Gann HiLo activator is based on. So the indicator is basically a simple moving average of the previous 3 periods, highs or lows, in fact. And then it just says a bullish signal is generated when the price is above the Gann activator, which is clear because we said once we trade above a certain Gann angle, in fact, then we're in an uptrend and the environment is bullish, while once we trade below that and trade below this angle, we have a short or bearish signal, bearish market environment, in fact. So when the price is above the Gann activator, it indicates a long trend in the traded market using previous periods price lows for calculation, in fact. So it looks then at the lows, which are obviously higher, and then calculates this HiLo indicator here, or activator in this case. Now, same is true, only the opposite when looking at the short side here. A bearish signal, which is generated when the price trades below the Gann activator, indicating a short trend in the traded market using previous periods price highs in this case, since we're talking about falling highs. So a short sequence you get once you have falling highs and falling lows, where each high is lower than the previous one. And this is how the Gann HiLo activator is in fact calculated. So we don't dig too deep now into the theory behind this and give all the input parameters and formulas behind this, because this is just for those who probably really want to understand or probably want to program the indicator themselves. But what we want to in fact focus on is on how to find out how the setup looks like and how to trade it then in the real world, in fact. So here, this is the chart, which is perfectly illustrating the Gann HiLo activator. So it's to some extent really looks like a moving average, in fact, but the way you calculate this is completely different than this from a moving average calculation, where you, in case of a simple moving average, just add each closing price and then divide it by the number of prices you just added up to get an, let's say, SMA 50 or something like that. In this case here, we also use the angles, which are calculated when looking at when looking at markets from a, let's call it Gann perspective, in fact, and when using this geometrical way to look at it. So this is how the Gann HiLo activator, the technical indicator, how it looks like in the real world, in fact. And now with this indicator, what we want to do is we really want to do an intraday trading setup We want to use this indicator. In fact, you can also see this here. So I have this from MQL5, in fact. So by the way, let me just use this probably. Can I probably copy paste it then from here? Well, let me just see. So there's an article. One second. There's an article also on MQL5. I'm just typing here in the chat box. So the article, the headline of this is, in fact, how does the Gann HiLo activator, how can you trade with that respectively? How does it work? Oh, let me just click here. It's probably good. So this is how the indicator looks like. That's what I just presented. And then there's an article that you can see that's on just some lines. In fact, you have to read here. Just to understand, once again, how it works and what it looks for. But what we want to do is we want to, in fact, look here at a setup and a clear rules. We want to follow them and then also show in a chart how it works in the real world. So what we do is, first of all, it's important that we have a time frame. Respectively, there's a certain, this is definitely something which is true for all strategies. So you should also, and all the time, first of all, wonder, who am I? So this is now going a little deeper. So I keep this open here. You can screenshot this, no problem. You can also view the recording later on YouTube. But now I want to probably, first of all, go through why it's so important to know who you are, to understand to really understand why the strategy you trade and your personality, your character, should correspond well with each other. The thing is, you say, well, I'm a student, let's say. So just to give an example, I'm a student, and there is one day in the week, let's say it's every Wednesday, I don't have to be in university. So it's time to study, stay at home, go to the the German word for this is Bibliothek. What's the word for this? It's where all the books can be found around the topic to study it. So I'm sorry, I'm just library. Sorry, it's library. So you can go to the library and everything. But you decide to say, well, Wednesday is the day when I try to finance my studies, and I have to trade, and I want to trade to finance my studies, to make money to pay for all the bills I have during my life as a student. So now the thing is, what does it mean? Well, it means that you can only trade on Wednesdays. But it's not sad that you can also trade on Mondays, Tuesdays, Thursdays, and Fridays. So that means that you have to find a trading approach which makes it possible to continuously trade during that time span. Which then means you have to find, first of all, a product which suits your personality. That's also one thing which is very important. So some of you probably might say, I want to use highly leveraged products like turbo certificates or something like that. I really doubt that this is, well, it's difficult to say. It's a good product. It's probably the wrong way to put it, but it's definitely important to understand that you have to know yourself well to find out whether such a product is the right choice for you or not. So it's highly leveraged. There's a time component in it. There's a price component in it, which means the price has to trade above a certain level to a certain time or within a certain time span, which is adding enormous pressure to some personalities, in fact, which is most of the time resulting in stress, especially. And now you have to wonder, am I the right person to trade this product? Or it's probably better to use a product which is especially not dependent on the price, on the time component, so that you have to trade at a certain time in the future above a certain or below a certain level, depending on whether you're long or short. And this is something you really have to understand. The same is true when it comes to know what's your current lifestyle, respectively, what is your working place allowing you in regards to your trading, especially when it comes to, let's call it higher frequent trading, which means more than one, well, let's probably say one trade a day, but it depends on when you have to enter the trade. Just imagine you have now a time, let's say the signal is generated, the strategy is looking at the European equity markets opening, let's say in the DAX, for example, and you have to enter the order around 9 a.m. in the German, in the morning, German time, for example. The only problem is you have to be in the office every morning at 9 a.m. So just imagine you sitting at your laptop at work, and you have to enter your order while your boss is waiting for you to join a meeting you have right at this time every morning. So is it really an option to trade the market open in the DAX then in this case? Well, the answer is probably not. And this is something you have to really understand if you start to wonder whether such a strategy works for you or not. So this is very, very general. So it has, in fact, nothing to do directly with the strategy. But if I give you the setup now, it does not necessarily mean that you say, hey, great setup, I take it and I trade it, because you have to make sure that it fits your personality from a risk perspective. So it's not just to find the right position size, but it's also from a risk perspective when it comes to frequency. When it comes to the product you trade this with. I mean, in case of Admiral Markets, we're looking at a FX CFD financial service provider, which is using so-called transparent products. So it's not like you have to consider volatility and time and everything like that as you have to in borrowings, for example. But still, this is something which is of high interest, and it's very, very important to understand that. And also, you have to make sure that you have the time to trade the markets actively, that your life allows that. And it's not that you have the strategy and you say, now my life has to fit my trading, but it's the other way around. It's your trading has to fit your lifestyle. And if it does not, well, then find another strategy, find another setup which corresponds with your living experience, respectively, your lifestyle in general, because everything else is potentially causing stress, potentially resulting in the setup, which might be profitable, which could result to be unprofitable then once you trade it, but try to somehow make it fit your lifestyle. Okay, so just to give you a general introduction to why this is of importance. And so in this context here, it's also important to know then, for example, when it comes to risk, can you handle, let's say, positions overnight? Is that possible? So once we talk about equity markets, for example, once we talk about spot markets here, we know there's a risk that the market gaps higher or gaps lower. If there is no, let's call it overnight trading taking place. So this is something you have to keep in mind when trading the market. It's also important from a risk perspective. Are you willing to take this risk? In my case, for example, I don't like this at all, to be honest. So which means I really hate it. I think hate is a very, very hard word, but I really hate to have a position overnight, especially when it's high leverage, respectively, a lower time frame. High leverage is probably not the right word here, but I also use leverage in my trading, certainly. But I don't want to have a position overnight, which potentially keeps me awake. So there's probably a time overnight when I wake up for whatever reason. I'm thirsty. I have to drink something. Well, then I want to drink something. I don't like to have the first thought in my mind when I wake up, oh, what's the market doing? I hate this. This is something, when I sleep, and I want to get a rest. And this is something you have to wonder for yourself. Are you that kind of character who can handle that? I'm not saying it just doesn't work for me. It doesn't mean that it's not working for you, but it's very, very important to keep this in mind. That also means you have to find out whether the product, it's not just the product, but also the market we are looking at here. Product, it's in regards to as I already said, price component, time component, whether it's a so-called true product, or it's like a warrant, for example, or an option having a price and a time component. But it's also true when it comes to the market you're looking at here. So which means FX, for example, is open 24/5. It's trading around the clock. There's no such thing as an overnight gap, which means once the market continues to trade, there's no such thing that I need to be worried now about the position, but I have my stop and I have my take profit, for example, placed in the market, and I don't need to worry don't need to be scared when I wake up overnight. Let's say I'm thirsty, that I have to check my smartphone and see where the market is trading, because I will see it at the next morning. I can't change it. I mean, I'm sleeping. I'm in my bed. I want to get rest. So, which is not true when looking at equities, but what is true when it comes to FX, for example. So that's why here, for example, what's noteworthy when looking at FX and when looking at Euro USD, for example. That's also true when it comes to the aggressiveness of movements, for example. So a currency pair like Euro USD, which is the most traded currency pair in the world, has a tendency of being let's call it slow to move. So sometimes there's some from time to time, they're very aggressive moves on the upside, on the downside, but this is nothing. When looking at Euro USD, this is really like it's relaxing for someone who actively trades the DAX, for example, so the German index, which is sometimes pushing 150 points within 10 minutes on the upside and then just reversing it within the next 5 minutes again. So, and the reason why one market is so aggressive while the other is quite relaxed, it has to do with market width. It has to do with market depth also. It has to do with the volume which is traded in this market, for example. So taking everything this here into account is perfect illustration why I use this, because it fits my style, it fits my personality, and that's something you have to answer for yourself. So no one can help you with that, by the way. So this is where the real work comes into play, and also you understand now why it's so important to know yourself well, why there are so many professional traders talking to you when it comes to mentality, when it comes to mental strength in your trading. Where is the psychological aspect being found, respectively? Where does it has, let's call it anchor, in fact, and it's exactly there. You have to understand yourself, you have to know yourself really, really well, and that's a lot of work you have to do, but it's not something in regards to work out a setup or something. That's another topic or another issue, let's say, which will rather sooner or later become a topic. But just to make sure that you understand, it's not just I take it out and then say, well, now we look at Euro USD or we look at M15, but it also is because it corresponds with my personality. And that's something you have to keep in mind here. So now let's come to the setup. Finally, time frame. It's M15. So we are looking at a 50-minute chart, in fact. So we generate something between 1 to 2 setups per day around. This is what we can expect. And then we look at the most traded currency pair in the world, which is the Euro USD. And we use an indicator, as we already introduced it, the Gann Hi Lo activator, aggregation 3, okay? And the so-called standard MACD, the MACD. So we already had some webinars on this indicator. This is something, or an indicator you find directly in your MetaTrader in this case. So so you don't need to download it somewhere. This is true here for this, let's call it custom indicator. It's the Gann Hi Lo activator. So, and then what we do is, when it comes to the long entry, we here look at the Gann Hi Lo, and once it's crossed from the price chart, so Euro USD chart, M15 in this case, from below, and the MACD, the histogram, is in fact bigger, 0, greater 0, there's a long trade generated. And so what do we do in when it comes to the stop? Where do we place the stop? Well, we look at the last relative low on M15. So you see, it's a combination of several webinars we already, or topics we made a topic here within this Trading Spotlight series. So we made MACD, in this case, the indicator, a topic. I have to say, who was it? I think it was Marcus. Marcus, I think, or Paul, both. What I know is I did some, but it was a combination. So I introduced the MACD already, but it was also a trading system, and we used MACD and the slow stochastic in it. But however we put it, so we already introduced this. And then when it comes to relative low, it's a question of price action. So where to place the stop. That was a topic I had here, and how to use this to optimize automated trading strategies. So simple breakout strategies, for example, and how to use this knowledge when it comes to price action. So you see, you really combine several aspects of this Trading Spotlight webinar series and place the stop then here in this case at the last or on the last relative low on M15. And the exit of the position is once the price chart crosses back below the Gann Hi Lo activator, in fact. So it's a classic trend following approach we follow here. So we can completely reverse the setup when looking here at the short entry. So Gann Hi Lo here crosses the price chart from above, and the MACD histogram is smaller 0. The last relative high on M15 is where we place our stop, and then the cross of the price chart back above the Gann Hi Lo in this case is closing our position, and is generating the system in fact. So that's it around the setup. And now what I have here is I have a long setup where we want to introduce this, and then I have also a short setup. So first of all, let's start with the long side. As you already can see, by the way, here it's a March. So this is when I looked at the chart. Very important to note, you have to have a trending market conditions. Looking at the chart will show you that right now, for example, price action in USD is very, very choppy, and it's not very attractive to trade trend following approaches, in fact. So this is also something you have to take into account. While the overall behavior, let's call it, of in this case Euro USD might suit your trading personality, it could be that the market conditions, as right now, for example, do not favor, also not on the lower time frames, do not favor trend following approaches, which means you have to adopt accordingly and find trading tradable markets which not only suit your personality, but in addition to that, also suit this, in this case, trend following, intraday trend following strategy. So there we go. So you see here the histogram, how it's calculated. It's the difference. It's calculating the difference between two moving averages, in fact. And once the difference is greater 0, then you have the histogram in the positive territory here. So we trade above here 0, obviously, with the histogram. And then here you see that the price is crossing the Gann Hi Lo from below here. So, and this is where the long signal is generated. In fact, that's quite easy. The question is, more interesting question is, in fact, where is the stop placed? And there you can see it here. So you have a sequence of higher highs and higher lows here in this case, which makes this region the last relative low, in fact, and this is where we place our stop. And then you also can see it here. This is where we exit the position. Why do we exit the position? Because the price here, the candles, are crossing back below the Gann Hi Lo in this case, which is also, can also be seen here with the switch from this green line then to a red line, in fact. That's it. Nothing more to add here, in fact. We also have here a short signal, which is illustrating how this system also works from the short side. So you can see here again, histogram is below 0. That's first of interest, in fact. So, and then we have here the cross from the price below the histogram. By the way, let's just take this as an example here. So there you can see it. The histogram here switches to the short side, in fact, so it's slightly positive here in this. So once here the cross took place, we had no signal generated. Why? Because while the price crossed below here the Gann Hi Lo activator, the histogram was positive, and that's why we had no signal here. But that's changed with the histogram then turning negative, the market reversing, and then crossing back below the Gann Hi Lo activator. So here is the signal generated, the short signal, with the stop being placed at the last relative high, which is then at this, in this case, which is here. So this is where we place our stop. And then we write the position, we write this trend as long as the Gann Hi Lo indicator is not crossing back above the price. It's not crossing back above the Gann Hi Lo activator, yes. And this is where we exit the position then, in fact. And you can also see here, it's an M15 chart. So the trade usually is held during an intraday time span. So it's not really common that you hold a position longer than that, even though once you hold the position longer than an intraday on an intraday time frame, and it extends over, let's say, 1-2 days, 1 day probably, 2 days is very unlikely, but 1 day, that also indicates that you're having a very strong trend. And this is also something which is of a high importance. Just imagine you're in a trade. How many times probably you sat in front of your screen wondering, well, will the trend right away end, probably cross back, or will the trend end here? In this case, your thinking is completely it's not needed. It's not needed at all, because the system generates you a signal, and it tells you we write the trend as long as we trade, in this case on the short side, below the Gann Hi Lo activator with the price. In this case, respectively, we trade as long on the long side as we trade above the Gann Hi Lo activator. That's it, in fact, which is making trading quite easy, let's say, especially, or yeah, easy when it comes to decision making and whether to enter, respectively, especially exit the trade, in fact. So let's sum this up. So Gann theory is a concept which is used here when it comes to formulate this Gann Hi Lo activator. Gann theory predicts market movements by using angles, especially, and it's based Gann-based predictions of price movements on 3 premises: price, time, and range. And so the Gann Hi Lo activator, in addition with the standard MACD here, can be used as a momentum trend trading signal provider for your intraday trading. Oh, I'm sorry. Yeah, that's it. So the system I presented used the Gann Hi Lo activator aggregation 3. Then you use the MACD, and you enter the trade accordingly to the cross from the price in relation to the Gann Hi Lo activator. And once the MACD histogram, in this case, is greater 0 for the long side, respectively, lower 0, then it means that you're trading the short side, in fact. Yeah, and that's it. So don't forget to join us next time. On Monday, Paul will be here for deep dive into moving averages. So moving averages was also a topic here, as you have seen. So he will answer questions like, why are moving averages so popular, and what are their pros and what are their cons, in fact, and what various ways can we use them in our own trading. What I can say by from my personal experience is, in fact, that I love moving averages, because it makes it really, really easy. It smooths the chart, or it smooths the trend, and you really there's no much thinking included. So if we trade above the moving average, whatever aggregation I might use in my trading, well, I'm long. I'm favoring long setups, while I trade the short side once we trade below that, and that's something which is making things easier and helps you to relax in your trading in such an abstract world, and which goes hand in hand when it comes to trading, in fact. So Paul will be here on, it's not the 25th of April, but it's the 25th of May, in fact, at 2 p.m. London time. And your inbox will get the webinar registration link directly. Click on it. If you watch this now on YouTube, then you can register for this webinar Trading Spotlight series. You can register for free via admiralmarkets.com. There you go to the education tab. There you look for the webinars, and there you can register for this Trading Spotlight webinar series. And more analysis. I already mentioned it at the beginning. admiralmarkets.com. Definitely worth giving it a deeper look here. And Here are the contact details, especially when it comes to the Gann HiLo activator. Still, just go via the marketplace in the MT5, and there you'll find it within the MQL5 library, let's call it. And here the risk disclaimer, and that's it from my end. So happy trading. Watch your stops. Talk to you again next week. I look forward to it, and see you then. Bye-bye.